Hello and welcome. This is Rogos Productions, and today in this video I am going to be walking you through on Forex trading strategies. So I'm going to be sharing with you some strategies that you can apply to trade in the Forex market. Okay, now there are different ways to trade in the market. Okay, what works for you might not be the same thing that works for another person, and so it's good that you know a particular strategy that you follow and be consistent with it and master it over time. Okay, in my last video I said I was going to do this video and show you some of the strategies that you can apply as a forex trader. Okay, now so without much ado, let's hop into this video and let me share these strategies with you. Okay, now the first strategy I'm going to share with you is scalping trading. Okay, now this is a sort of strategy that takes in cognizance of small movements of prices in the market. It targets intraday price movement, very short movement, even in split of seconds. Okay, you can make trades with this method. All right, so it holds position for a few seconds or minutes. All right, and it exploits small opportunities and takes advantage. So you want to look out for very small opportunities in the marketplace that can happen within minutes or within seconds and take advantage of those small price movements. This method of forex trading, or this strategy, is called scalping trading, and those using this method are called scalpers. Okay, now let's look at some of the advantages, okay, some of the pros of this method. Now you have lots of trading opportunities because you can actually make a whole lot of trades in a given day. Okay, so you have the opportunity to make much trade in a day with this method. Now you can have frequent profits, though they might be small. If you are good with this, you can have frequent profits from this method. You can make a healthy income from trading over time with this method of trading, but it is not usually advisable for retail traders because the machine is going to be faster than you because you are human. So except if you have the technicality and you really know your game in this, for you to be successful with this method of trading. So let's look at some of the disadvantages. Okay, it requires constant monitoring. That means you have to be with your system, you have to be on your screen every now and then to monitor these price moves. Okay, so it requires your constant monitoring of the market. Now there is also high risk of large losses in a day. Just the same way you can have frequent profits, then it can also be the other way around. You can have frequent losses or large losses. You can lose your money in split of seconds and split of minutes with this method. Now it's very stressful and you are constantly glued to the screen, which might eventually affect your eyes if you have such kind of issues. So this is for the scalping trading method. So now let's go to the next strategy that I want to share with you, day trading. Okay, now this strategy capitalizes on the volatility of an asset. Okay, it works well in a volatile market, and the period of trading is also 30 minutes or less. Okay, now it focuses on few markets. You don't have that ability to focus on large markets or many markets at a time. So if you want to be successful with this, you have to focus on a few markets in a day. Okay, now the time frame, like I said, is 30 minutes and below. It's within a short period of time you make your trade. Let's look at some of the advantages of using this method. Okay, now if you are good with this method, you can also make money most of the months. If you know your game, you can make a lot of money with this because you also have the ability to make much more trades in a month. All right, now it removes risk of overnight trade. because all your transactions are in the daytime, so you don't have that risk of something swinging against you or against your favor overnight. So that risk of overnight trade is removed from this type of trading. Now you could yield a healthy income over time. Of course, if you know your game very well with this method, you can make a lot of money with this. Now let's look at some of the disadvantages. Okay, now it requires concentration for you to quickly react to market changes, just like scalpers. Okay, this also requires some sort of concentration and being able to react to market changes or to price changes. High intensity and high stress trading style, which I have also tried to explain. And you have huge opportunity cost compared to full-time salary elsewhere. This means that if you look at the type of gains you might make trading in this with this strategy, compare it with the time you're going to spend on another job, you now know if it's actually worth it, because you might be earning more if you have a full-time job than using this type of strategy. Okay, so that is where the opportunity cost comes into play. But however, some people also make a whole lot of money with this type of strategy if you know your game very well. Okay, so now let's look at the third strategy I want to share with you. It's called swing trading. Now, with swing trading, you can hold trades for days or even weeks. Okay, basically you take advantage of supports and resistance in the market. So you capture one swing in the market. It could be from a support line or from a resistance line. Okay, now you're concerned with assets with likely short-term price moves. So short-term price moves, you take advantage immediately and swing your trades. Okay, now like I said, you would likely have to buy either support or you sell resistance or you trade pullbacks. All right, now let's look at some of the advantages of using this strategy. If you are good like other methods too, you can make money on most quarters, because with swing trading you are not going to have frequent trades like you would have in day trading and scalping method. Okay, now you can trade part-time without quitting your full-time job, so it doesn't require you to be glued to your system or watching out for the market. You can just place your trades and then leave it and watch it over time. Now it is also effective in volatile markets. Let's look at some of the disadvantages here. It is associated with overnight risk. So because you can leave it for days and even up to a week, so you never can tell what will happen overnight. So the trade can go against your favor just overnight and you might lose your entire money. Okay, now you won't be able to ride trends. Okay, those short trends that may happen within minutes and a couple of few hours, you may not be able to take advantage of those kind of trends when you apply this method. And then you also have less number of trades when you compare it with day trading and the scalping method. Alright, so now let's go to the last but not the least, which is position trading. Okay, position trading, it takes a longer term view of the market. So this runs into months, weeks, and you have to understand the fundamentals of the market for you to be able to identify assets that you want to invest in. And you also have to have a technical understanding or analysis of the market, so you know what type of assets you're going to invest in to be able to predict how the market would go. Okay, and you can hold trades for weeks and even months in this type of trading. Now, some of the advantages of position trading, it does not require constant monitoring, just like in other method that I showed you. You just place your trades and you can leave it over time, and you don't have to be there to monitor your system or to monitor the charts to see what is going on in the market. Okay, now it is less stress and you're not concerned with short-term price fluctuations. So price fluctuations in the short term does not really affect your trade. Okay, and then you can trade in many markets. So you can trade in this market, you don't have to focus on it, and then you go to another market and trade also, and then over time you can now check what is going on with your trades. Now some of the disadvantages of this method is that you have low number of trades. So you can have just one trade in a month or two in a month. Okay, so you don't have that ability to trade a large volume. So it requires an understanding of the fundamentals. You have to really understand the market. You have to really understand some of the fundamentals, what affects the market, like GDP and retail prices and all that. Okay, now you can actually watch winners go to losers in this method. Like, things can just go wrong following this method. You can watch people that you thought that they were going to prices that were going to be winners, and it goes to losers just right there in your eyes. Okay, so these are some of the strategies. Like I've shared with you 4 strategies that you can use to trade forex. Although there are other strategies, I'm not saying that this is so comprehensive, but these are the major ones that are available or people use most frequently of the time. So I hope you got some value from what I shared with you in this video, and if you got some value, make sure you subscribe to my channel, because I will be dropping this kind of content every single week at least. Okay, and make sure you like this video and drop your comments in the section. Let me know the strategy that you're using right now if you're already trading Forex market, and perhaps if you want to make the right choice, if you want to choose a broker, or maybe you're just starting out and you want to know or find out the broker that will be suitable for you to work with, I have my #1 recommendation of a broker, which is in the description of this video. The first link in the description of this video will take you to that broker, and that's what I use and that is what I trust. So you can use them if you wish. Okay, and that will be that for this video. So I hope you got some value, and I will see you guys in my next video. Okay, thanks for watching and have a great day.